Welcome to the Savvy Property Investors Podcast, a weekly show that delivers the best hard-hitting property industry news, business advice, and talks that will get you ascending in the real estate industry. Now, here's your host, the amazing award-winning property and business coach, best-selling author, and serial entrepreneur, Miss Sapphire Gray.
Welcome to another great season with us here at the Savvy Property Investors Show. I'm Charity Chikene, and I'm so excited to take you through this podcast. Now, on today's edition, we are focusing on the right property strategy that best suits you. So if you're a novice investor or a veteran in the industry, pull your chair closer as we talk to Sapphire Gray of the Savvy Women Group about how we can, strategize ourselves properly and get it right from the get-go. Sapphire, I'm so excited. I don't know if you can notice, I'm really excited because last week, we just spoke about, the UK market being ripe and ready for that property investor. Mm-hmm. And now this week, it's like you really want us to be property savvy.
Yeah, absolutely.
Because this week it's exciting. We are finding the strategies that best suit us.
Mm-hmm. Absolutely.
So let me be official. Welcome to the studio.
Mm-hmm.
I cut you short. I'm sorry. Thank you for joining us. Mm-hmm. And I'm really excited to kickstart us off with our first question.
Excellent. Go for it.
Outline for us the different investment options that are available here in the UK.
Well, basically, there's quite a plethora of options, but I always say when you're looking at investing and getting into investing, you have to find what suits you. Now, take, for instance, HMO investing. HMO is where you have multiple occupants within that property. They're individuals. They pay their rents individually. So therefore, you're dealing with individual personalities. So if you're not a property investor and want to build your portfolio out, dealing with multiple of people, then this strategy wouldn't be for you. So it's to deduce who you are as an individual. So you've got the family lets, single lets. You can have student lets. Student lets again. You have a multiple high turnover of students coming in because obviously it's based on times of term times. Then you have the service accommodation where you're like a mini hotel. So you're accommodating people coming in, booking your apartments or your houses out at different times of the year. Then you have the different strategies like rent to rent or lease options and different things like that. There's different options that suits each person's pocket as well. So when you're looking at these options like commercial, you want to get into commercial units, you have to find out where you are financially. If you even like working with people, so then you'll be a developer. So you're working with a team, however, you're not going into the rental space of it. So there's different ways of deducing what strategy will suit you and why. So working out firstly where you sit financially, where you sit like with people, will help you to gather information as to what type of strategy you want to go into.
What are some of the most popular strategies out here in the market? Which strategy are people diving into?
Well, you've got the HMO, but HMO different. They're doing where you're creating communal spaces as well. So you've got HMO that is popular. You've got the American slang, I call it flipping. I like to buy, sell properties as well. Then you've got the buy, the BRRRR method, the buy, renovate, rent, refinance, and then repeat. So that's another popular one as well. Service accommodation is a lucrative one and a popular one now because a lot of people are doing staycations. So a lot of people are looking into that. Student lets, as the markets, as we've opened back up and universities have opened back up, student lets is also a good profitable one if you're looking to do that. Family homes, single lets, which I do. Most of my portfolio is around single lets. I do have some HMOs. and commercial conversions as well. Having commercial properties is another popular one. But I would say, and the hotels, people are going into the hotel space, themed hotels as well. That's becoming more and more popular. And the buy to rent, I spoke on last week's show on the buy to rent. A lot of people are going into that as well. But it really does come down to where you are sitting financially. That would allow you to then look at a range of strategies, but then also break that down to affordability, whether you can afford to get into it or not.
Sapphire, I'm curious to know, what are some of the mistakes you've seen or you've learned from when, opting, for example, for the buy-to-let option?
So when people are going to investing into the buy-to-let, so you're buying a property to let it out, they're not doing their market research. They're not knowing whether that property in that area is going to be rentable. So you could be stuck with a property that is not, no one wants to rent the property. I always say, do your due diligence, look in areas where there's good schools, if it's for families. So I'll give you for instance, when I look for properties, I look for properties in areas where there's natural greenery around, good catchment schools. So I look on websites to know whether it's a good catchment area for schools. Easy transport links as well. Shopping malls around that area, easy to get to the shops. Transport links, all of these things come into play when you're looking at a property. Now, if you're looking for a family single lets and then you looked in the countryside, that you're narrowed down your market to people that actually want to live in the countryside. You've narrowed it down to people that drive. So you're narrowing down your market. So if you want to broaden your market, you have to look at where are people wanting to rent from you. And you can go on different forums like on Facebook and find out where people are actually renting. Go on spare rooms and look on there where the demand is. Pick out where the demand is as well, because location is key to any, whether you're new to investing or a seasoned investor, location is key. And some of the other mistakes is not having enough money when you're renovating. Say if you're doing a buy to let and you've got some renovation work, a lot of people get into it and they get overwhelmed because the amount of work that they need to be undertaken before it's a lettable unit, and they haven't got the money to cover it. So make sure that your finances are in place and you've got a contingency pot to cover this as well.
Sorry.
Yeah, go ahead.
You've touched on something there when you said, staycations. A lot of people are doing staycations now, which has gotten me thinking about, home furnished and unfurnished properties. Looking at the current state where HMOs are, the popular out there strategy, how should we do home furnished or unfurnished HMO properties?
Well, if you're a good landlord, as a landlady, as I am, when it comes to furnishing a property, my properties are always furnished. And when it comes, because we've just gone through this 18 months of hygiene, I'm going to call it, and having this come up on top of us, it's always making sure that your place is clean. So if you've got mattresses on your bed, I tend to donate old mattresses, and I buy new mattresses for tenants moving out. Now that could to some people that could be expensive, or you can get someone to really do a deep clean and disinfect your mattresses so that you can reuse them if they're not in a bad state. Making sure that everywhere's clean, so your wardrobes, your chest of drawers, your bedside cabinets, your carpets are definitely disinfected. So anytime someone comes in or out, making sure that these are always kept in top notch and they are clean. If it's mattresses that you're worried about spending the cost, protect them, put mattress protectors on them, waterproofing, so that when those people move out, you can get rid of those as well. And make sure that you have your sheets and everything laundered properly, so that you know that it's been boiled at a high temperature, and that people can feel assured that you have cleaned that property to the best of your ability, and they shouldn't have a problem with renting it from you.
So the COVID-19 pandemic, left us with a new normal now, and the UK is a major student destination because of the quality education. Looking at the student-led strategy, can you talk more about the pros and the cons of investing in such a property?
So the pros of investing in student lets is that you've got students accommodation, especially if your property is at its top peak. There's going to be loads of students that want to rent your property from you, and especially if you've purchased that property in a university town. So you're going to have a good influx of students wanting to rent your property from you. I would say the downside of that as well is a high turnover. Because there is term times, you're going to have where students are going to go return home. So they're not going to want to rent that property from you. So always make sure that you can cover yourself in those sparse moments. And I always say double up on a property that you have like that. So if it's for student lets in term time, in the times that they're not there, that's generally summertime and Christmas times, turn it into a service accommodation. That way you've always got a turnaround on renting out your property, so you're not leaving it empty based on that you set up as a student let. You can also rent that out as a service accommodation as well.
Okay, so it's still something that people can get into. We can venture into that as well.
Absolutely, and I think it's still lucrative as it stands, because a lot of people are looking for that, as I said, that home away from home. And if you could create that environment and have a communal area within that, so they can gather and they can revise together or do exams or even drink as they do as students and party. If you're creating that environment for them, then they will more likely rent your property from you. And they would then recommend that property when they've finished their time with you to other students, saying that it's a good property to rent out. So yeah.
Okay, well, we are taking a quick commercial break, a very short one, but when we come back, we are getting more insights about the strategy that best suits us from Miss Sapphire Gray.
Like what you hear so far? Make sure you never miss a show by clicking the subscribe button below. Our podcast is only made possible by great listeners like you.
Welcome back to the Savvy Property Investors Show. I'm Charity Kene, and on the opposite side of the studio with me is Miss Sapphire Gray from the Savvy Women Group. Sapphire, thank you so much for joining us for this edition. This is our 6th episode of season 2. So thank you so much for giving us insights. Now, if you weren't here on the first part of the podcast, we were discussing about the strategy that best suits us, and moving it on further, we coming back in, having given the strategies that are out there and discussed a little bit about property, student lets and HMOs. The first question for this second part, Sapphire, you talked about HMO properties being a good investment, opportunity out there. It's actually the most popular one with investors. What are some of the restrictions that one can expect when they invest in such a property?
There's quite a few here, because you have to look at, when you're looking at a HMO as a strategy, you have to find out from the local authority whether where you are looking to purchase that property, whether it falls under an Article 4 area. Basically, you're not allowed to set up a HMO in that area anymore. It's oversaturated. So always connect with the local authorities and where you're planning to purchase your property and the road that you're purchasing that property on, to make sure that it's not an Article 4 area that you're going in. Also, most HMOs are licensed now, so you have to obtain a license from the local authority to have it as a HMO property. So make sure that you're compliant. That's you're getting your fire regulations, your electrical regulations, all of these things. It's a massive folder of compliance that you have to adhere to, because you are renting out a property. It comes under commercial, so you're renting out a property that is going to house multiple people. So you have to be compliant to make sure that they're safe. Your electrical safety certificates are in place. You've done all your emergency lights, your emergency exits, All of these things, you need to understand does it take to be a HMO landlord. Also, when you're also looking at a HMO space as well, the square footage that you have for each unit, for each tenant in there. How much fridge space do you have? How much cupboard space do you have? These are things that people don't look into. They just think, I'm going to buy this 3-bedroom house, turn the through lounge into extra room. And, then when it comes to getting your license, say, whoa, hang on a minute, you haven't got enough space to accommodate. There is restrictions on how many people you can rent your particular property out to. So always do that you actually purchasing that property, because you could find yourself stuck with, if you thought you could have 5 rooms out of a property and you can only have 3, then therefore you're going to be shortfalling on the rent and the income that you expected from that property. So make sure you do, and I've repeated this word so many times, but do your due diligence. And that simply starts with the local authority and doing your work to make sure that where you're buying is going to be compliant and safe for you to invest in.
Sapphire, you've spoken about Article 4. So for the novice investor, what does that article contain?
It's just basically a restriction. I'm not going to go into details of it. If you do want me to send you some information, happy to share that in the links below. But Article 4 is basically a restriction on any investor going into a particular area where the council said no more because it's oversaturated. So you could have a road where you've got 10 HMO buildings. They don't want that. They don't want you to keep on putting up more houses that are HMO on that road, because it reduces the housing stock. And also it oversaturates the area with multiple people. Can you imagine if a house was built for a single family, and say that's 5 members, then you've got a HMO that you've now turned into 6 or 7 people living in that one house. It's multiple people on top of multiple people. And if you've got 5 or more properties as a HMO set up on that road, it oversaturates the roads, and it can actually have an effect on the value of other people's properties along there as well.
Okay.
For the sale purpose.
All right. So you've touched on the HMO, the student-led. I'd like to pick your brain on the rent-to-rent, strategy. What are your thoughts on the future of the rent-to-rent? And, from your own opinion, what are your predictions, for future restrictions that may come into effect with this strategy?
Well, a couple of things here. First of all, I want to put it out there. I don't do rent-to-rent personally. That's not in my portfolio. I like to own my assets. With the rent-to-rent strategies, it's more for, I would call it the starting block. People that haven't got a massive amount of money to get in. And it basically is, you're getting a property from a landlord. So someone will get a property from me, take it from me, and then rent it out on my behalf, but doing what they want with it. So they could take that property from me as the landlord, as the owner, the freeholder. They rent it out under the rent-to-rent option and turn it into a HMO, and they have the responsibility of that. But they have to pay me what I want for the property. So if I wanted 1,500 for it, they'd have to pay me what the going market rate is for that property. And then they pay that and then manage and look after the property. Landlord is still responsible for the insurance and things like that, but they would be guaranteeing me the rent back each month on the property that they've just taken from me. The options are, as I said, is for people that are just on the starting block of trying to get on into the investment realm and doing it that way. Now, rent to rent is compliant as far as that you have an agreement set between yourself and the landlord, and that's what you need to make sure that is totally locked in, and that you are telling the landlord what you're doing with the property. There's so much myths out there that it's illegal to do it, you can't do that. But if you've got an agreement with the landlord, I always call it like you're managing the landlord's property. That's what I call it. You're managing someone else's property but making money from it. So it's just more than a management service. You're actually taking it and renting it out and doing all those things behind it. But the strategy is a good one. And I know a lot of investors are into it. We had interviewed someone, Muzzy, a couple of weeks back who has really built out his business in this space and is doing phenomenally well. But I think when you know how to do it and you do it well, it does work out. And when you've got happy landlords, you've got a happy business, because you know what you're doing. And the restrictions on this, there isn't really no restrictions on it. It's just always making sure that you're compliant, and compliant with yourself as well as the landlord.
So you've spoken about Mozi, and I remember that was our second episode of the podcast. Following the insights you got from Mozi, how can investors get into this type of property management?
Well, when you're looking at the rent-to-rent space strategy, you have to first of all, again, like people and like approaching people and communicate what your intentions are. You have to find a landlord that wants to go into this type of deal with you, or this service with you. And most landlords is just because they just want to be hands off. And that's why they will hand over their property to you, because they just want to be hands off and free of the responsibility. They don't mind buying the property, but they just want someone else to take it over and just see the returns each month. Now, when you're looking at that, you have to also be fair to your landlord as well, and be respectful of who they are. So don't try to rip anyone off, and don't leave them hanging, because a lot of what happened through the pandemic as well is a lot of people that were in the rent-to-rent space just basically turn around to the landlord and says, well, I may be under contract with you, but hey ho, get on with it, because you are the mortgage holder. I ain't got that responsibility, and left them hanging. And I thought that was so distasteful. But that's the nature of the beast when you're going into this space and you're a landlord, and you give it to someone to rent out on your behalf. You give it to someone to run their business and build out their business. That's the kind of things that you should avoid. Don't ever do that to somebody, because they've entrusted you with something. So those are pitfalls of getting into the space. Know that you can have each month, when that landlord is expecting their rent, that you can afford the rent to pay, because that's what you're doing effectively. You're paying that landlord outside of all the other associated costs that goes with a HMO. You have to make sure that you can cover that landlord's agreed amount with that landlord each month. And if you know at the outset that you can't afford to pay that, or that you're going to have we talked about void periods last week as well. So when we're looking at the void periods, can you cover those void periods on behalf of your landlord? This is the kind of things that you need to understand before getting into this space.
All right, Sapphire, under what circumstance would a REIT investment option be beneficial to an investor?
It depends on what angle you're coming from, because when you're looking at this kind of investment, you've got to look at who you are as an individual, and it does benefit many investors as well. But you've got to research what this is and what options you can do on this kind of type of investment as well. There's loads of information that we offer on this type of investment. So there is some benefits of getting into it, low entry costs, basically understanding the market, being able to do something and then move yourself up the ladder. So there's lots of benefits, but we do have a lot of information on this. So if you would like that, we're happy to share it as well. Okay.
And lastly, Sapphire, how can an investor prepare for the void periods that come, when they can do. Sorry, Sapphire. The question is, how can an investor prepare for void periods, and what can they do to reduce the likelihood of this?
Yeah, this is something that I shared on last week's podcast as well in regards to the void periods. I'm just going to keep it short. Have a pot that is for void periods only. So when you're getting your income from your property, so that's your rent, you're going to have a pot for your accountant and your tax at the end of the accounting year. You're going to have a pot for your management. And even if you're managing, you're still going to have that pot. You're going to have your letting expenses, and also make sure you have a void pot as well. So you've divided your income from the rental income that you've got. And these pots are to serve you in the event of. And I've always used this method for my own portfolio, because it also helps me to save. So if I don't have any void periods, that pot's sitting there at the moment. It's a good amount of money that's sitting in there, but it can sit there as a saving and grow on that. I know there isn't much that you're getting back, but I could actually reinvest that if I wanted to at this stage into anything else I wanted to do, because I've got enough in that void period pot to serve me going forward.
Okay. So, Sapphire, you are a property coach as well as an investor. So for the listener listening out there, how can we get in touch with you?
Yeah, I'm on all over social media. So that's 50 at Savvy Women. I'm on LinkedIn as well. So look me up, Sapphire Gray. You also can contact me on contact@savvywomen.co.uk. And on Messenger, WhatsApp, just reach out and I'm happy to share a free consultation. I call it the coffee or ET. And I do this just to get to know you and you get to know me and see where I can help you build out your profitable property investment business.
Sapphire, thank you so much. This has been quite an informative podcast, and it's like it's all aligning. We're putting our ducks in a row this season, But I think by the end of our season, we'll no longer be having novice investors. Everyone will be claiming their veterans because of the information that you're giving. So, listener, thank you for tuning in. Remember to share, to subscribe, to tell a friend, to tell a friend. Remember to rate, to download. This is one podcast that needs to go out to the masses. We are live in, countries such as the US that has given us good audience. The UK, Africa as well is giving us good audience. So we need to take this message to all the corners of the world, because this show is one way of securing your future through property investments. And if you're that person looking for financial freedom, don't keep this secret to yourself. Put it out there. Let everyone take flight. Have a savvy, moment with their finances. So be bold, be you, be property savvy with the Savvy Women Group. Join us next week.
Thank you.
This week's episode of the Savvy Property Investors Podcast was brought to you by our sponsor, the Savvy Women Group. Thank you for tuning in. If you enjoyed today's show, head over to our website, www.savvywomen.co.uk, to gain access to our free resources and more insights about our guest speaker today. Remember, we make your business our business, so you can unlock your full potential and improve your quality of life.